Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Welcome to Grain Gab, a show where we sit back and talk about what's on our minds and what's going on in the grain markets and how it affects you, our producer, and just what to do about it. Grain markets are ever crazy, moving, downright emotional.
You're emotional right now, Lori?
Well, I can just see farmers being emotional. That's kind of what we work
Fair
with
enough.
coming into this season. So
It's just how it is, right?
And that's what we're here for, to sit down, to take a look at things holistically and find a strategic yet grounded approach when handling the obstacles that we're faced with in the market. I'm Lori Nelsen, your host, and with me is Kristen Stien. How you doing today, Kristen?
I'm good. I got like green juice, power juice, so we should be good to go. What's in your cup? Or
it's
mason
just-
jar down in Missouri.
It's
I always got to ask what's in your cup.
just water.
It's not a mason
Good old-
jar today.
Nope, just good old
Man,
water
it sucks
today.
to grow up.
I do like my mason jar, though. As you recall, last time we switched it up a bit. We're going to talk through the how-tos of grain marketing. Last time we talked about how to put a cost of production together. Today we're going to talk about how to forecast different profitability scenarios using the profitability tool.
And I think it's good to preface, Lori, as to like why we do this. We started the call off by talking about how emotional things can be. And the less you have laid out, the more emotional it can be. And so this helps us see what different scenarios look like, right? Whether it is just actually at current market, how many bushels do I need to break even? But what if I don't grow a crop? Or what if I have an awesome crop? What if the price is really darn right disgusting? Or what if we've got some opportunities in this thing? And just like from all of those things, we try to then say, what is realistic goal? Okay. And so if any of you guys have heard the goal setting analogies, right? They always talk about the SMART goals, but basically being specific, measurable, attainable, realistic is another one, and time-based, right? And so this is where a lot of that comes out to your guys' farm. And this is kind of how we start saying, what is that specific goal? What's a realistic goal? What do I got for potential here? Because then it helps us drive that decision making a lot easier. It helps us manage risk and know that this is a good thing that we're doing. And just all around gives us a good picture and a good thing to aim at going forward. The first kind of step is to sit there and say, just like at current market, what are we dealing? What's the scenario that we're dealing with here? This is Joe Farmer. These are just examples. Don't use this as your own farm's situation. Okay. This is where we highly encourage you to kind of go back into last recording, kind of look through what is it that I need to know specifically about my own call.
So, profitability tool. Last time, if you remember, we talked through APH. We talked about crop insurance level. We talked about input cost coming in with $4.81 as a break even on corn. And so we would just pull down here into the profitability tool and put some scenarios together. So if we could anticipate or look at a cash price, I'd go to December 25 is trading at 453 and a half here today.
We need 212 bushels to break even. Okay, so we need a little bit better than average on that end from this specific farm. And then we kind of go down into yield potential. So, Lori, what level of crop insurance is Joe Farmer taking out?
85%. So 85% on 200 bushels is 170 bushels to the
170
acre.
bushels. So,
That's worst case scenario.
Yeah, in theory, that's worst case scenario on yield, right? Can we grow less than 170 bushels to the acre? Sure, we can. Been done plenty of times, right? But this is that guarantee that even if you grew 0 bushels to the acre, crop insurance is going to bring you back up to at least 170. So we know that worst case. So at current market of 453 and 170 bushels to the acre, we are losing
$191 an acre.
Ouch. So we know what our downside risk is from a yield perspective. How about average crop?
Do you put in the 200 there?
Well, I
That's
suppose that is the
APH.
definition of APH, average production history. So probably a fair number from that standpoint. This is also where we would encourage you to touch base with that crop insurance agent to truly know what that number is, because it helps us. The more accurate we can be with numbers, the more valuable numbers are. Okay. So at 200 bushels to the acre and a 453 price, we're losing, drumroll please,
$56 an acre.
dang, this year is just looking great, Lori.
Mhm.
Starting out good. All right. So we can grow typically better than a 200 bushel corn crop. What's the highest you've ever averaged for a whole farm, not just the field?
You know,
Don't you tell me 300 bushel.
a 240, 250
Okay.
for
Fair enough.
realistic number. So
So 240 bushel corn. What do we got for profitability there then at a 453? Ah,
100
we're making 125 bucks an acre.
yeah. Yeah.
Hot dog.
Mhm.
Okay. So this kind of gives you the example of what the profitability looks like from the downside of yield to the upside of yield, right? And everything in between. All right. Let's go on to the part that a lot of guys look to us for. Price.
Yeah.
How
So
low can it go?
how low can we go? Yeah, with, inflation, can we keep it a 380?
Oh,
Don't know.
on. Your bullhorns are coming out.
Last year, we went to 360.
Right.
Is it a
But what I mean, like, so
360
what
number?
happens in the market to make it go to 350? That's actually
Oh,
relevant in today's world.
okay. So March 31st, planning intentions report from the Ag Outlook Forum, they came out with 94 million estimated acres to be planted in the US. Okay, so if we bring in a higher number than that in the March 31st planning intentions report, that could be a bearish number to us.
Yeah. Fair enough. And I mean, yield's always going to add to that or subtract from that,
Mhm.
right? And I think it's just this market's a little interesting, right? Because everybody hears tariff and goes running because that's terrifying to the ag markets. We've experienced that before. But at the same time, tariffs have come out and we've maintained relative support, right?
Yeah.
Even as the funds are kind of getting out of things. So it's like, okay, we knew going into January 20th that tariffs were going to be a thing. It's almost like we knew going into the Ag Outlook Forum that there's going to be more corn acres planted, and we'll kind of dig into why in a little bit when we go through beans. But I think it's more about, again, this is a futures market. The market doesn't care about what we already know; it cares about what we don't know, right? So what could surprise this market to push things lower? And I think that's more maybe coming in with a really big yield, maybe coming in, to your point, with more than 94 million acres. I mean, if all of a sudden, if inflation settles down, if things just take a breath, I don't know. I could see 350 corn if something like that happens. Do we find support? Demand has still been relatively good.
Yeah.
So possibly, right? So let's plug a 350 in there, see what that looks like.
350, here we come.
Oh, ouch. Losing 260 bucks an acre. And this is the key point to that. This is why we want to hone in on that number and say, what is my downside risk, especially on bushels that I do not have sold? Because that's what we want to protect our butt on, right? That's what we want to have some level of a put, maybe coupled with crop insurance. We can kind of get into that at a later date, but that's the number that we want to protect because I don't know anybody that would enjoy losing 260 bucks an acre.
No, I don't think it's true risk. It's too risk
Yeah.
on unpriced bushels. So,
Yeah.
okay,
Absolutely.
Kristen, let's move
Okay.
on. Let's move on.
Oh, you're like, let's think about happy thoughts here.
Yeah.
All right. 450 corn, which is where we're at right now. At APH, that 200 bushels to the acre,
bushels.
we're losing 62 bucks an acre.
Mm-hmm.
So something to keep in mind there. All right. You like happy thoughts. Let's talk about how high it can go. What's the top side of this market?
Top side of this market, 480 is pretty resistant. $5?
I thought your bullhorns were out. Come on.
They're
$8,
out
baby.
a little bit. Okay, we're not going to $8. We're not
Right,
going to
all right, fair
$8. So
enough.
somewhere between 5 and 8.
To be
Do we-
fair, we're sitting like there's some analysts out there that say that we could go as low as a 1.3 billion bushel carryout on this, what's sitting in the bin right now. I think
Mhm.
that might be a stretch, but even at 1.5 billion bushel carryout, and you have weather issues,
Yes.
right? Look at that seasonality, the seasonality of chart of when the high hits in December corn. It's not February or March typically. It's
Right.
April, June, July. We got some opportunity here, don't we?
Yeah, so
Look at that drought monitor, Lori. Come on, get those bullhorns out.
$6.
Well, $6 make you holler. Oh, there we go. I like what you're
Okay.
seeing there.
That would
200
be
bushel
nice.
corn,
Mhm.
$6 corn. We're looking at 238 a bushel. Okay. And
Yeah.
mind you, right, when we look at the price potential, price risk, all that, if we take this back 20 years, the corn market, and we draw a line at 450, that is an incredibly pivotal number, right? And it's quite interesting how this market is hanging out there. Anytime we're below that, there it goes, right? That's kind of why we said 350's downside risk. Anytime we kind of break above that, there's opportunity. And this market is just sitting here fiddling, wondering which way it's going to go. And also the funds are doing that too. They've come back to more of a neutral position going into the volatile, the emotional time of the year, going, which way we going to teeter totter here? Right.
Yeah.
So I think either of these numbers are absolutely realistic. It's just a matter of the fact that nobody knows. And this is why we protect our butt and we have targets to say, I'm going to sell it if it starts going up because this is where my opportunity is. That's what my profitability potential looks like.
Which takes some of the emotion out of this picture.
Okay. All right. So, Lori, how much do you want to make an acre? What's your goal?
This year as I look across, $150, maybe 200.
Okay. Fair enough. And I mean, maybe fair to say we can't guarantee a bumper crop. You never know. You're not sitting there and planting and making adjustments to that planter, fertilizing, all that kind of stuff for 150 bushel corn. Right. So,
Right.
like, what are you shooting for? What are you fertilizing for?
I'm fertilizing for 240.
Oh, you are looking for a bumper crop.
Mhm. If I
So,
don't have that fertilizer down, I feel I lose potential. So if I'm gonna look at profitability, what am I looking at for fertilization? I'm fertilizing for a goal of 240.
all right, let's back that off just a little bit because it does take weather to help with that. And you do live in
Sure.
Missouri.
Sure.
If you moved a little farther north, we might be able to help you a little bit more with that. No, I'm just kidding. 239. All right. Bear with me. Go 230.
Okay, 230 it is.
Okay. It's
Okay.
because it takes both yield and price,
Yes.
right? Long gone are the days where just being a good farmer can get you by, right?
Mhm.
But you can't just be a good marketer and not have the bushels either. That's why we actually have to put the puts on and do a good job there. So price wise, I don't know. We're saying $6, but maybe we sell on the way up. Should we say $5
$5.
average, right?
Okay. Oh yeah.
Hey, we got
I'd
pretty
take
close
that.
to that goal,
Mhm.
right?
Yeah.
And this is where we really want to hone in because this is where the emotions help us substantially. If our goal is to decrease debt on the farm or to help Johnny come help Joe on the farm or whatever that goal may be, tie it to a number, right? Over how many years, this is how many dollars that I need to make. And this is what that means per acre. Because then all of a sudden, when we know that $5 gets us there, we are selling like crazy, man, because that's the emotion. That's where the true emotion comes from. And let's be getting after that.
Okay. Ready to move to beans?
How about beaners?
Beans. Oof. So we put together, we're at 60 on APH, 85% crop insurance level. Total input cost is $717 an acre. We got a break even, Kristen, of $11.96 in this.
Yowzas. And I think we're being fairly generous. If we have a 200 bushel corn APH and a 60 bean APH, usually you have a higher corn one with a solid APH like that. So we're even trying to be generous on Mr. Farmer here. But yeah, and when you look at that break even, especially compared to where current market is, which is
November's trading at 10.11.
all
this
right.
morning.
So we've got a solid, pretty much $2 a bushel that we need to make up for, right? So I think when we talked about 94 million acres of corn being planted, a lot of that is because of that bean to corn price ratio and what that means to profitability, right? As we are going into planting season, we're still sitting there. This is where we're still sitting at. Yikes.
Yeah.
So, plug in 1019, 1011, you said?
10.11.
71 bushels to break even. Doable with the right August.
Yeah.
Right. Alrighty. Let's talk yield potential. You said you're taking out 85% crop insurance.
So that's 51 bushels to the acre.
Worst
for the
case
low side,
scenario.
Worst case scenario.
Actually, kind of is close to corn's worst case scenario for downside on yield. But it'll be interesting to kind of see how this plays in that way too. All right, 60 bushel beans, average crop, right? At current market, we are losing $100 an acre. All right, how high can you raise? What's the best bean crop you've ever raised?
I'm probably going to have to look at that 70 bushels. We've seen some of that. Seems a little high. Do I go with a 68 here?
Let's see. Okay. So on the high side, lose about $30 an acre.
Yeah. I just
All
have
right.
to look. I just have to look.
Yay. All right. So that's our yield potential. How about on price? How low can beans go? Right. Let's go back to stocks. Worldwide stocks is probably the biggest thing that we continue to watch, especially as South America is harvesting their crop. Their harvest speed of the 5-year average reports seem really, really good by way of yield results so far. So there's nothing that really makes us say, oh, South America is really going to cut into that stocks forecast, which means that we're still sitting on the largest amount of beans that we've ever sat on. And we're very fortunate that demand is what it is. I mean, we've got tariffs again on the horizon. How low?
First look would be, 960, but I feel pretty bullish at that.
You feel bullish at 960?
I do. I just feel like that's too high of a number. If I look at a monthly chart.
Yeah, I mean, you snap a monthly chart, anything underneath that like 1080 number, we tend to hit $9, right?
Let's put a $9 in there.
Okay, fair enough.
I really don't want to go lower than that. But
I know.
Okay.
Fortunately,
$9.
that's out of our control.
Yeah. Okay.
All right. So at $9, we're losing $177 an acre.
Yeah.
Okay.
Okay.
Current market.
10, 11.
Yep. Losing
Okay, we've
$100
seen that
an
number
acre.
4.
All right. What's opportunity in beans?
You said it that 1080 is a significant number. If we could find ourselves above 1080, if we were happen to hit a demand button and a good use for soybeans. Crush numbers have been good. Oh, do we just put a 12 in there if we find ourselves over?
And I don't want it so some of the comments that we've heard is, well, if everybody's going to plant corn, then there's going to be fewer bean acres, right?
Sure.
So maybe we find support with that. But again, if we've got 350 corn, do we really need $12 beans? But, and this is a big but, big but. Don't talk about my big but. But there's always the disclaimer that we want to put with beans because they are the wild child of the commodities group, right?
Mm-hmm.
They are incredibly volatile. I go back to 2016 when my husband and I got our first farm that we could farm ourselves, and we were planting beans that year. And I mean, we were sitting in this like 850 area for quite some time. And I'm like, honey, I got the marketing side. Like, don't you worry. You produce it. I'll market it. It will be golden. Right. And beans got to $9, sold some. Beans got to $9.50, sold some more. And I was pretty well sold out by $10. And where do those suckers go? You hit the number. $12.
$12.
For no reason.
Yeah. My mind was been yeah. If we're looking at $6 corn on the high side, it should be at least $12.
Fair enough. It's a fair point, right?
Yeah.
Because they can be volatile and weird things can happen. I've seen it been done before.
Yeah.
All right. So breaking even on the high side. Yes. All right. Yeah. So again, back to how much we want to make an acre, and we want to be realistic on this number. So yield wise, I don't know, what, 65 bushel beans? Is that to shoot for?
Let's shoot for there.
And maybe 1080 because your grain marketer is going to be jumping and screaming and hooting and hollering to get bushels sold if we get back up to there.
Yeah.
All right. We're close to break even. Maybe not the greatest feeling, but again, this kind of goes back to like if we're looking at realistic numbers, why guys are considering planting more corn than beans. And I think, I mean, for what it's worth, as we've gone through this last renewal season and really dug into a lot of these numbers with guys, that's not far off of what we've seen on average. Right. Maybe favor corn a little bit more from what I've seen. And I think this is where it just goes back to maybe the realistic goal is to make our money on corn and use beans as the cover crop that they are and just try to break even there. Right?
Yeah, the cover crop they are. Okay.
Nice and exciting, right?
I know.
But again, this goes back to, okay, well, at least I won't be losing money at 1080. Let's start really getting realistic here and shoot for good goals and have those numbers kind of implanted into our mind as we start really start focusing on turning the planters into the field.
True. If you don't have it done by now, it's getting to the short rows to get your pen and paper sharpened up.
Get her done.
Okay.
Anything else?
Are you going to ask me questions?
You so know there is. I love it. Love it. Okay, I'll be nice to you this time and only ask you one.
Okay.
Mainly because Paige is like, time, guys. Time.
Yeah. Okay.
All right. So, when is the last time you cried in a movie?
Oh my gosh. It's been
Probably
so
never.
long since I've
Blackheart
been
you.
to a movie. And I
That
cry
too,
on
like
a
even
dime.
at like while watching
Just
a
watching
movie.
a movie.
Yeah. It was a Grain Gab, wasn't it? Admit it.
Every Christmas, we tend to watch Lonesome Dove and Tombstone. So I always cry in Lonesome Dove.
Okay, I thought you were going to say Tombstone. I'm like, you cry a Loot Tombstone? That is a movie I'm going to have to put on my watch list because I'm not sure I've seen it before. So when I need a good cry, I'll go do that.
Well,
maybe not. It's not actually when you cry at, just like Tombstone, isn't it? And Grain Gab.
No,
They all fall in the same category.
We're just going to leave it there. We're just going to leave it there.
All right. On that note, after crying about, what was it? Lonesome Dove and the bean prices, we're going to leave you that and get back to the happier days. Happy days.
Yeah. Everyone have a safe spring. And thanks for joining us on this episode of Grain Gab. If you like what you hear, please hit the subscribe button. It really helps our algorithm. Thanks to Paige and the Insights team for making us look good. Until next time, keep your head up and your feet grounded. Cheers.
Cheers.